Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Wednesday, the 13th day of August 2014, and this is the daily report for gold and silver. Continuing our divergence in the gold and silver pricing, we do have gold trading higher, silver trading lower. First to gold, 1312 and change. That's off of a low of 1303.90, high 1315.70. Silver does continue to track lower, currently trading off about a dime on the day, well below 20 at 1982 with a low of 1964, a high of 2018. More on silver towards the end of the show. Traders, we truly have a inside trading day with a lower high and a higher low than we've had on the previous day. Starting today's show by looking at a 360-minute chart. A couple of things are apparent. I did send out a special trade alert yesterday, and all traders should have moved their stop to below 1300. I am currently pegging our interim support right now at about 1305. Now, as you can see, we've had this market trade. It had a low today, according to a Kitco, of 1303.90, call it 1304, so just below this 1305, but I still believe that we do have primary support right in this area of about 1305. That's on the support side. In terms of the resistance side, we have not gone ahead and tested any of our resistance today, as our high is well below the 1317, with a high, as you can see, of roughly 1315, and that's right up in here. So what are we looking at? Well, one thing that we can see on the intraday chart, and I'm not convinced that we'll see it on a daily chart. We'll take a look at that in a second. But if we take these series of highs here and kind of connect the dots, so to speak, to these highs here, here, and here, at the same time, if we look at our lows and kind of angle that up to cover our lows here, what we can see is we're genuinely trading near the top of the range, not quite a compression triangle, but what we do have is a consolidating range. And as I said, on a daily chart, you're not going to see any kind of a compression, really. We can kind of draw our highs from here. We can draw our lows from here. But as I say, what we are genuinely seeing is a dynamic compression of range. Now, as I said, all stops should be below 1300. 1300 should hold. We are looking at a market in gold that has been moving higher. And as I said over the last couple of days, it is my sense that what we are looking at is we are truly forming some sort of a base and a level of support right now between 1300 and 1305. My sense is that we will build some type of support, and my sense is that we will probably break to the upside. So traders, even with light liquidity as we have had and light volume in these summer months, if we are to run under the belief that what we are looking at is a market that is trending higher, there are going to be certain benchmarks that we need to hit, as well as certain variables that we need to consistently see in the market. Now, we're looking at a two-day chart. This has our Andrews pitchfork in, and that's one of the criteria that to me is critically important on a technical basis, and that is this outer prong. This outer prong is really defined trading activity as this market traded lower, except for the first rally, which began at the end of last year and carried out throughout 2014, this $200 rally. We have never seen this particular chart and this technical study, we've never seen price action actually move above this outer zero prong. That was until this most recent rally, when not only did we see the market move to and outside of the prong, but really even on the retracement here, maintain above this price point. And that is, to me, a good sign in terms of the market moving to the upside. Now, the next thing that we'd want to see in terms of this chart, as you can see, I've added a negative 23%. That will be our next level in which we really want to see the market break above, which is going to be this particular channel line. At that point, we can, I believe, for the first time, actually begin to put in an Andrews pitchfork that defines an upside trending market as opposed to a downside. And the reason that we'll be able to perform that study at this point is, we've talked about this before, but when we take a look at the series of bottoms, this is our double bottom 1180 here, first time, second time. Up until that point, we could easily see the market in terms of its overall characteristics having a sell-off with a lower low than previous, and then as it moves up, the high would also be a lower high when you compare it to the previous high. We then go to the next low here. That's equal, but we do have a lower high. Market then hits its double bottom. This high again, it is a lower high, lower low. Market comes down and hits this double bottom, and we genuinely have the first change in terms of the dynamics of the market. What I mean by that is that as we take a look, we've got a high here, we actually get a higher low. Now, the higher low is the first part of this equation. The second part of this equation has got to be higher highs. Higher highs would, of course, be kind of unfold, so to speak, as this market breaks above these various tops. The first top, of course, being at around this area here. And then we've got, I believe that this is going to be our 1391 here. So we've got 1391 here, 1345, market currently trading 1314. It absolutely, on a technical basis, has to break above this top here and this top here. If in fact that is how trading activity unfolds, we can then look back at this chart and absolutely see a series of higher lows and higher highs. And in the same way that the characteristic of a downtrending market was the opposite of that, we would now have that concrete definition or proof that we have moved out of this down channel, this bearish market tendency that has been prevalent in the market really 2012, all of 2014, really culminating or terminating, ending on the second bottom at the beginning of 2014. And so that brings us to silver. We have trailed our stop up, protecting our equity and protecting a very small amount of profits should the market come down and hit our stop. Of course, we're long, I believe, 93, 94 in that area. The market is now roughly $20 above that, so we've got good profits in there. But my sense is if we're going to capture the big moves in the market, we want to maintain that position. Silver, quite honestly, a different animal. We've talked about this over the last couple of weeks. We noticed it. We now are seeing other articles where other analysts are beginning to comment on the divergence between gold and silver, the gold-silver ratio, so to speak. Take a look at this chart. It's our daily chart. This is an absolute critical level of support that it holds. Right now, it's trading just at, this being 1978, market trading at 1980. So right at that point, because traders, if it breaks that point, the real next logical level to look for support in silver has got to be the 76% retracement, and that is sitting at around 1935. Maintain your current long position in gold. Maintain no position in terms of trading structure in silver. This has been Gary Wagner, wishing you, as always, good trading. Have a great day. We'll talk to you tomorrow for another daily update and review. Bye-bye.